Hello everyone. Welcome to my channel where we will be talking about the top Canadian stocks to buy on a day-to-day basis. These stocks are going to be good buys for the long run and can also be a good option for day trading. Before we start, let us look at how our last stock pick fared in the market. Our stock pick of Thursday, Enthusiast Gaming Holdings Incorporated, seems to have increased by $0.27 per stock. That's a 2.64% increase on this gaming stock in a single day. If you haven't already seen my previous video, I would recommend watching my video on Enthusiast Gaming Holdings, where I have analyzed why this stock has huge potential to grow in the coming years. Today is the 3rd of May. Let's get started. This stock was recommended on one of my earlier videos by Mountain Climber and he has risen. So a big shout out to them for requesting my views on this stock. I take all your comments and reviews seriously, so do leave a comment if you have any suggestions or stock picks that you want me to cover in future videos. The stock we are going to talk about is Senseonics Holdings Incorporated, ticker symbol SENX on the New York Stock Exchange. This stock does not trade on the Toronto Stock Exchange. Senseonics Holdings Incorporated is a medical technology company. It is focused on the design, development, and commercialization of the glucose monitoring system, which helps people to manage their diabetes. A point to be noted regarding this company is that the majority of the revenue is generated outside of the United States. This stock is part of the healthcare sector and it holds a lot of value in the medical diagnostics and research industry. The company by itself is quite small, with a total of 82 employees at the time of recording this video. Senseonics Incorporated is an innovative medical device company in Maryland, USA, developing transformative glucose monitoring products. Their mission is to help people with diabetes live their lives confidently and with ease. Their device, Eversense, enables users to receive real-time glucose measurements on the user's compatible mobile phone or smartwatch. The product consists of 3 parts. Sensor, which is a pill-sized device that rests comfortably just under the skin, inserted professionally by healthcare providers. A removable, rechargeable and water-resistant transmitter, to transmit the data every 5 minutes. And the receiver, which would be an app that is available on any mobile phone or smartwatch. The app is used to track events like meals and workouts and see them right on the app's graph. The company boasts of setting new standards covering 5 main pinpoints, making them unique from their competitors. Helps to support better diabetes management. Accuracy unaffected when taking Tylenol or vitamin C. Detects 99% of hyperglycemic events. Shown to significantly reduce A1C by 0.5%. Transmitter can be removed and replaced without wasting the sensor. They are also the first and only long-term continuous glucose monitoring system in the market today. Apart from their huge list of achievements, 2 other notable points were that they have the first and only transmitter that is removable and also the first and only sensor that is MRI compatible. Coming to their milestones, at present, Eversense provides continuous blood glucose monitoring for up to 90 days. Their milestone for this year is to double that and obtain 180-day sensor approval in the year 2021. If we look at the Eversense patient profiles, we can see that 68% of its patients are those who have moved to Eversense from their competitors, Dexcom, Medtronic and Libre, that show a proof of concept and that people are finding the Eversense product to be better than the current products available. The top features as per their existing users are accuracy, sensor life and implantable convenience. Their product vision is to create a single sensor product for 1 year without a transmitter and no daily calibration requirements. At the pace they are developing their products and the 180-day product in the pipeline to be approved this year, their vision can be easily reached in by 2025. Senseonics Holdings, earlier this year released its 4th quarter and full year 2020 financial results. They generated a 4th quarter 2020 revenue of $3.9 million and reduced operating expenses by $13.8 million, compared to the prior year period. They also raised $175 million of proceeds from equity offerings in the 1st quarter of 2021 to strengthen the balance sheet. According to Globe Newswire, worldwide continuous glucose monitor market size reached USD $4,245.67 million in 2019 and is expected to grow substantially during 2020 to 2025, registering a yearly growth rate of 17.24% throughout the forecast timeframe. The market is largely driven by increasing cases of diabetes among children and the geriatric population. This news does support the requirement of the products that Senseonics creates, and with the present trends, Senseonics might dominate the CGM market in the future. Coming to some stats, according to the company, their worldwide revenue projections for this year are 12 to 15 million, and they expect to double that every year for the next 5 years, with the revenue range being 150 to 200 million in the year 2025. If the projected revenues can be reached, then this stock is a definitive buy and hold stock that can reap huge profits in the coming years. Senseonics Holdings Incorporated is currently trading at $2.12 on the New York Stock Exchange. If we look at the 6-month chart, this stock has increased from $0.54 to an all-time high of $5.20. This was largely due to hype around medical stocks in the market at this time. The stock value then fell drastically with no other positive news regarding the products. If we look at its stats on Wall Mean, there are a few red flags, with their income being in the negative 175 million range and a revenue of 5 million for a market cap of 907 million. This stock has seen a 6-month growth of 468% but had fallen 18% in the last 1 month alone. Senseonics seems to be an overvalued stock at the moment, but if it breaks past the $2.5 resistance, this stock can see a lot of growth. Based on 5 analyst ratings, this stock shows an analyst consensus of hold, with the average 12-month price target of $3.18, which by itself is a 49.53% expected increase by the end of this year. Personally, I would not want to get into this stock at this price point, as I doubt this stock will overcome its resistance value of 2.5 and may fall further to the $2 or $1.80 range. If the company is able to stick to its projections, then this stock would be a good buy in at the $1.90 range. With that said, this stock will definitely see a peak when its 180 days product gets FDA approved. This stock has the capability to reach the $8 to $10 mark by 2024, but that is contingent on how their product is received in the market, FDA approvals for their 180 and 365 days products, and how their products fare in the market against their competitors. If you like the content I put out through my videos, please smash that like button and consider subscribing to the channel. That sums up my top stock picks for today. Do let me know in the comments below what you think about these stocks mentioned in today's video. If you're new to investing in Canadian stocks, you can use the platform called the WealthSimple Trade. WealthSimple Trade is an online brokerage that allows you to trade Canadian stocks and ETFs with zero commission fee. I'll leave a referral link for WealthSimple Trade in the description box below. On using the below mentioned link to sign up and trading stocks for $100, you will receive an additional 10 as a referral bonus, which you can choose to withdraw or reinvest. That's a 10% profit right on your first investment. Before we end, I should mention I am not a financial advisor. The stocks mentioned in all my videos are from my personal research and seem to have been doing well for me. Please do like and subscribe to the channel for daily stock updates.